G'day and welcome to the Investor Motivation Podcast. My name is Rob Gowdy and today I have with me
Rachel. How you going?
Good, Rach. How are you?
Yeah, good, thank you.
That's a shot. Now this is a whole new segment for us.
It is. So we decided it'd be an awesome idea just to delve a bit deeper into some businesses. So you can learn a lot more about them rather than just on surface level, and what we look for as advisors as well. Yeah, when it comes to investing.
Yeah. Now, what we thought we'd do today is we'd kick off and we'd chat about my most favourite business that we've been buying for our clients for many years. So we thought, right, we know a lot about it and it's Microsoft. And I thought that'll be a nice, easy one. But when you start to delve, I thought, why the hell did we do this? There is so much to know. There's so many business units. And so we'll do our best we can. But there's probably simpler businesses we could have picked that has one or two businesses within it, products or services, but Microsoft is a very big beast.
It is. As you said, it's definitely one of our favourites, but there's a lot going on behind the scenes, so it is exciting just to delve a bit deeper.
Yeah, so let's kick off with obviously what does Microsoft do, and that's where it gets very complex. And we've been using their products for a very long time, but Rach, do you want to, I suppose, just go over the broad products and services that they have?
Yeah, so they sort of break it down into three major segments. So you're looking at productivity and business services. So that's looking at Microsoft Office and then, of course, LinkedIn, which is popular.
So Office is
your Word, Excel.
Correct, and that includes Office 365 too within that suite.
Dynamics and all those things.
Fantastic.
Then the majority of their business and revenue comes from cloud computing. So so their cloud platform is absolutely massive and is a key player in that space.
Yeah, and that's where revenues are just bolting at the moment and is overtaking the whole business in terms of the majority of their revenue.
Yeah, absolutely. And the third one is more of your personal computing. So that's looking at your Surface devices, your Xboxes, and their gaming systems there.
Yeah.
So,
and I think one thing that I love about their cloud system, and I know obviously there's two other big players in the Western world, excluding China. Obviously, Alibaba's big in that space. That AWS, which is Amazon Web Services, and also Google have very big cloud storage system there, and Amazon AWS is the biggest one there. But the connectivity for us as business owners and what we do in our world is we create our documents, Excel and Word and so on, and then it gets stored automatically within Windows. So there's that linkage, which is very different to Amazon and the like. It's a direct linkage. It's just easy. It's sort of native for us. We don't need to set something else up to.
That's right. Yeah, all automatically updated. Everyone in the office can obviously access it in real time. So definitely during COVID, a lot of businesses really relied on or are relying on this system still.
Yeah.
So.
Cool. Now you mentioned LinkedIn, but there's also Xbox. There's gaming.
Yeah.
So
that's another part. Isn't
it?
And
they recently acquired Activision Blizzard, which is a gaming developer, and that saw an increase in revenues in that space by 61% because of that acquisition. But that just shows the nature of Microsoft, these big tech businesses, that they are not scared to acquire. And Microsoft have over the duration acquired over 250 businesses.
It's incredible, isn't it? It's hard to imagine.
Yeah, in addition to their other businesses like OpenAI, that is obviously the developer of ChatGPT, that they've taken an interest in that business. They don't own it outright.
Yeah.
So lots of things playing there. Actually, I did some reading on GitHub, which is a platform for developers.
Okay.
Obviously, well above our pay grade in terms of understanding and knowledge, but I think there's about 26,000 businesses that must use that to develop things for other businesses.
Yeah, right.
So the platforms are incredible. And one thing that I noticed that when we first went on to Office 365, do you remember when that was, Rach? Is that Was it here when you came to work here? That sort of 6-7 years ago.
Yeah,
Yeah.
it was. But yeah, we utilised it a lot more. Well, obviously utilise it a lot more now.
Yeah.
It's so ingrained in our business
Yeah.
that we would be lost without it.
Yeah, the one thing that I noticed that once we had that, we had the Office 365 suite, that we were able to go and cancel so many other subscriptions around online forms, or that were just built in and part of the, part of the $20, which is probably now $30
Yeah.
per month payment. So brilliant. So let's now. And I probably should have given a bit of the structure for what we're doing, Rach, in terms of when we're doing a bit of a business deep dive like we're doing. There's 8 areas that we're going to look at.
Yep.
One was, what does the business do? Where does the income come from? The economic moat, which is, how resilient, how hard is it for a competitor to get into this business? And we can probably say right now that the economic moat for Microsoft is really, really wide.
Yeah, that's right. So this is I think it's a calculation somewhere in the background, but initially heard that Warren Buffett come up with it. But it tells us what type of competitive market advantage that these guys have or businesses have. You can either have a zero moat, narrow or wide. So wide is the ideal one, which Microsoft falls into.
So what would be a good example of a zero moat business, Rach, where it's just no barriers to entry.
Yeah.
It's not easy to start. So it might be making sneakers, although I don't have the skills to make sneakers, but there's not, or manufacturing some sort of lolly or something.
Yeah, that's right. Or it could be setting up an online shop to sell dog accessories or something like that, that's on Shopify or whatever it may
Perfect.
be.
So easy to do, been done a million times.
Yeah.
That's a perfect example. Thank you. So with obviously the economic mode of Microsoft, it's huge.
It is.
If we wanted to move from using Word and Excel and Outlook and the cloud services, where would we even go?
Yeah, I don't even want to think about that. And that is, one of the things that, Microsoft does have is that, what they call a network effect. So they're so integrated into businesses like ours that's the advantage that it's hard to get away from them, even if you wanted to.
Yeah.
So
obviously Google Docs is probably the competitor in that space, but I can't remember the last time someone sent me a Google anything in terms of a document. And obviously, switching from one platform to another one is sometimes expensive, and also that can cause stress within a workplace because not everyone loves change.
Exactly right. So there's the stress of training, and getting staff used to that, as well as, like Rob said, not everyone enjoys change. So if it's not broken, we'll keep using it.
Yeah, and just some of the stats that I was able to find as we go around searching is that the Windows operating system is used by essentially 75% of the world. And Teams has got 300 million monthly active users.
It's just incredible.
That's just Teams. And there was an interesting stat that I remember when we all went working from home during COVID. I read somewhere that it was the South Australian Health Department rolled out 40,000 Teams accounts in 1 week.
It's just incredible. It just goes to show the scale of the business, isn't it? And how they manage to roll out
and
that much in a short amount of time.
Scale and scalability. To add lots of people with no incremental cost increase. And one thing I read this morning was there was some game, it was Hailstorm, or I've got that wrong. There was a new game that was just released, and it was in their annual report. And in the first month, they've got 10 million active, it's probably daily users, but 10 million people using this one game, cloud-based. So I can't imagine the machines, the computers,
storage,
the cloud.
Yeah.
10 million people are playing this game. It's off the charts. So the next thing we're going to look at, so we've had a chat about what they do, where the income comes from, and the economic moat, which is very wide. Next week we'll do something a bit simpler, H, where it might have one or two products.
Yeah, sounds good.
So the next one that we look at is probably past performance and future performance, and what do the analysts think about this business. So what we're looking at there is we're looking at the analysts, the people that research Microsoft as from an investment case, and do they think it's a strong buy, a hold? What is the revenue growth looking like or not? Let's have a chat.
Mm-hmm.
What have you found when you've had a bit of a look?
Yeah, so like many of the large tech companies, the last 12 months have been incredible. But for Microsoft, so they reported a $245 billion in revenue, if you can get your head around that.
And just for context, so a couple of years, so that's a 16% increase. So back in 22, it was about 195 billion. Then it jumped to 212 billion, and then bang, jump again up to 245. So the growth, and this is the scale thing that we just mentioned before. It's huge. It can build. It's scalable. Country borders don't matter anymore.
No, that's right. There's no barriers, so it's it's incredible.
Yeah. So right at the moment, the business itself, which is worth noting, is worth $3.1 trillion. Trillion dollars.
Yeah.
That's
I knew you would do that. I knew it was coming. So predictable. But well played.
There was an undiscovered tribe in the heart of Peruvian jungle knew that I was going to do that. An amazing business. Revenue is growing, but obviously because these are highly scalable businesses, they get to keep a fair bit of their income as profit.
Yeah, absolutely.
Yeah.
So, who owns it? So, institutional-wise, top ones are Vanguard, BlackRock, and State Street Global.
Yes.
We're always looking at who has ownership that runs the business. So, when we're looking at the CEO, Satya Nadella, so he owns around $353 million of Microsoft.
So he's got a bit of skin in the game.
He does, yeah.
Fantastic. So I think for a business of this size, it gets very hard for the people running it to own, huge percentages of it. It's just impossible unless you're Warren Buffett. Smaller businesses that are at the start of their growth, obviously those people own a lot of their businesses. Large percentage of it. So I wanted to circle back a bit to performance and what the future performance looks like, and that internal, who owns it is one of the key 8 things that we're looking at to make sure that we're, I want to see that the people running it own some of it.
Yeah,
I think that's really important. But the analysts, the future growth is going to be over 12%. It looks like, and quite often what happens is that the analysts' projections for future growth and future profit is sometimes a lot of these businesses, do substantially better than what actually has been predicted. I think that they often surprise to the upside, I think it's one of those things that they possibly are relatively conservative numbers, and Microsoft has generally done better than what the analysts have predicted. The return on equity, which is a fantastic measure of quality and how they use capital, has been 32, nearly 33%, and future return on equity is around 27%. These are exceedingly good numbers. I think it's just for a bit of a laugh, the last 12 months return, 1 year, the business has done particularly well, up around 26%. Over the last 10 years, and this is excluding dividends, it's up 840%, so that's 8.4 times your money. But if you were one of the person to be there right at the start...
I read this, something similar as well,
If you were there right at the start, you are up 341,000%. So keep in mind that 1,000, let alone 341,000 of them, is is what they call a 10-bagger or tenfold your money. So it's a bit rich to go back and say, shares, business is the spot to be, which you and I know that's where we invest for ourselves and for our clients. So it's a bit rich to say if you invested all the way back in 86.
Hindsight's lovely, isn't
Correct,
it?
which we didn't.
Yeah.
That's 341,000%. But you don't need all that. You just need the odd business that does 400% for you and some dividends, or 500, or if you get really lucky, like we did with one of our businesses investments for our clients was Altim, and that's been an incredible business, and for some people that was 1,600%.
Yeah,
So
that's right.
That's a long way short of what that's done over a long period of time, but it's all, you just need one or two or three of those over, and this is the important bit, over decades.
That's right, yeah,
Yep.
long term,
Yeah,
sure.
it's very good. So obviously the growth looks great. It's an amazing business. The next area that we look at is the financial health, the balance sheet. So what does that look like, Rach? Have you had a bit of a close look at
Had a
that?
squeeze.
Had a squeeze?
Yeah.
Cool.
Excuse me. Microsoft's financial health is amazing. I don't think it really gets much better than that.
Yep.
They've got around 75 billion sitting in cash, I believe, at the moment, which is huge. And they've got minimal debt for the size of the business. So holding a lot of cash, it just gives them the opportunity as well to reinvest back into the business and some of these acquisitions that they're seeing there.
Yep.
And obviously it gives us confidence to know that the business is
Cool. So,
quality.
and one thing that you read recently, Rach, was the dividend increased.
Yes.
The quarterly dividend increased by 10%.
10%, yes.
And they also announced more share buyback.
Yeah.
So share buybacks are exceedingly important. That is the company buying back its own shares, which reduces the number of shares on issue, which means the growing profit is distributed between less shareholders. Or not less shareholders, less shares.
Yeah.
And there was, that's right, the reinvestment of capital, which we can go, let's leap on. So great balance sheet. We're happy with that.
Yes, we are, definitely.
Then number 6 of the 8, obviously we're looking at dividend and payout ratios. Now the dividend is pathetic, Rach, isn't it? Peter Thornhill would be wrapped with my sarcasm here, that it's a pathetic 0.8%. Isn't that terrible?
It is terrible,
yeah,
but it's not.
It's not terrible. So it's a very low dividend compared to Australian banks, particularly Telstra, but they're only paying out 25%.
Yeah, which I think is awesome, because it means that they're reinvesting back into the business. We want that growth, and that's how they're going to get it as well.
Yeah. So the way we describe this is we want a small percentage of a growing pie.
Yeah.
Yeah. So the payout ratio, essentially, for every dollar that a business makes, how much do they pay out as a dividend, and how much do they keep to reinvest? So the dividend yield, which I think is a very blunt tool to look at a dividend yield as a percentage in isolation, and this is where it is really important. Let's ignore the dividend yield. So it was a low dividend yield back in 2014 when the annual dividend was $1.24. Roll the clock forward to 2024, the annual dividend yield is $3.30.
Yeah, so we're not going to rush off with the dividends, but like we said, it's it's still an increase.
But the dividends have more than doubled in 10 years.
Yeah.
So people shouldn't just focus on a dividend yield in percentage terms. So that's really exciting. They're keeping a lot of money, 75% of all the profit they make to reinvest. And last year, the research and development of their products and services, do you want to take a guess, Rach? Just for fun?
I couldn't go for it.
Yeah, $29.5 billion. There's only one other company that reinvests more heavily than that, which is Google.
It's insane, isn't it?
It's exceedingly good. So let's move on to the analysts, the buy, sell or hold. I've got some numbers on this. So for the September numbers, there was 57 analysts that were providing their opinion and their research. That of the 57, there was 21 that said it's a strong buy.
Okay, yeah.
Even after the share price going up by nearly 26% for the last 12 months, 34 said it's a buy, and only 2 said it's a hold, and there was no one that said sell it.
No surprises with the last one.
Yeah.
Yeah.
So, and from a price target point of view, and the analysts provide targets. So there'll be a more of that 57. There'll be someone that's conservative. There'll be someone that's more aggressive. The conservative, the lowest end price target was $440 US, and the top end was 600.
Yeah.
It's current. So there's a midpoint there. I forget, it was probably around that 470, but it's trading at just under 410 at the moment.
Yeah.
Yeah. So that's all very positive. We've spoken about the who owns the business, and then I'm going to get your thoughts too, Rach. At the end of the day, were you a buyer or a seller? So you can think about that one. Latest news, we probably covered off on a little bit of that, but yeah, any other news that you would that's worth covering off on, Rach?
I think the bulk of it, we've spoken about the acquisitions of late. So they are in the midst of making a nuclear power deal. So they're jumping on the clean energy bandwagon, which they have to, and it is awesome. So that's going to position them well in the future as well.
Yeah. So that is actually Microsoft doing that, or is that Bill Gates in his foundation? Yeah, it's actually Microsoft.
Well, yeah, it says that they have been. So
cool.
We'll delve a bit deeper into that one.
So this is reinvesting back into the business to make things better. Obviously, they've got their partnership with OpenAI. Artificial intelligence is just huge.
It can't be ignored, no matter people love it or hate it at the minute. It's the way of the future, and I think it's amazing. So, Microsoft are definitely all over that.
Cool. Well, yeah, from our point of view, we're using ChatGPT, we're using Copilot. It is saving hours in our week and days. And this is just a very small financial planning business in country Victoria that is using it. That these businesses make it usable for lay people like us that are not, tech geniuses.
Like yourself, Rob.
Absolutely. So, Rach, for you, buy, hold or sell?
Well, I love Microsoft, obviously. Markets have had an awesome run, so I'm a little bit torn between the valuations now of the share price and, what they're sort of stating. But I'm kind of a bit of sit on the fence at the minute.
So it's a hold?
Yeah.
And if the market corrects at some stage in the future?
It's a buy.
Then it's a buy.
Without a doubt,
And
as I said, we love it. It's a good business.
I'm the same. That it's hard to buy after we watched the NASDAQ go up by 36% for the last 12 months. Microsoft is up by 26%. Might there be a correction coming? More than likely at some stage. We don't know when, don't know why it'll come down, but there will be opportunities ahead, and that's where Warren Buffett is definitely, he sold half his Apple shares, he's built up his cash to $280 billion, he's ready to go.
He's preying on the vulnerable, isn't he? Waiting for opportunities. So.
Very good, Rachel. That was a good first chat, and we picked our favourite business, but not the simplest business, so the next ones will be a bit shorter than 20 minutes. Rach, on socials, where can people find you? So
Instagram, TikTok, Facebook, LinkedIn.
And that's under just
Rachel Todman. Or Rach Todman.
Very good. You can check out our YouTube channel, which is Investor Motivation. There is nearly 700 videos there. And our podcast, obviously our podcast goes there as well. You can find me, Rob Gowdy, on Instagram and TikTok. I do the odd live there, which hello do TikTok up there as well. Feel free to reach out in any of those platforms.
And if there's a business that you want us to explore or you want to learn more about, then give us a comment and we'll see what we can do.
We'll do some research. We love to do it. We love to know more. Cool. See you, everyone.
Thanks. Bye.